Good morning and welcome to IG's early morning call on IG Live on Tuesday, the 25th of July. Let's take a look at the headlines as we wait today's European start in half an hour's time, where we're looking for small gains now at the start of today's trade. The Hang Seng stock index up over 4% at one point today as a result of news that China, the authorities are to step up policy support. We're right in the thick of US earnings today. We've got Alphabet, Microsoft, both reporting after the bell tonight, both trading all sessions on the IG platform. It's not been too bad recently. We'll see in just a moment. The Dow continues to hit new recent highs. And we're monitoring what's happening with wheat prices. Chicago wheat soaring today. Russia is involved once again in the markets as it continues to hit key grain warehouses. And we continue to monitor the after effects of all that. Take a look at what's happening in volatility. The VIX index continues to bump along the ground as we've been reporting and continue to report. The currently trading 1567, and it's very difficult at the moment to look at it any other way. But the one thing that it is the long trade across the European markets continues to win out. As we look now towards the start of today's European session, we've now broken above this line here that we saw the highs back on the 16th of June for the FTSE 100. We're now at levels there not seen since the 24th of May as we continue to see interest in these markets. We'll catch up with a couple of stocks worth looking at in the session today. Unilever and Reach, both two stocks that are reported this morning, which could help give us some sort of indication as to how things are moving. More on that in just a minute. Let's take a look at what's happening across the European continent. German DAX up at highs not seen. Well, we have seen higher highs than this in the last week or so, but broadly speaking, the market's on a fourth day in a row of gains. We're quite absolutely at the top of the candle at the moment. No sellers in this market at 16,212. And French markets similarly, after yesterday's declines on the cash session yesterday, the 24-hour markets pushed higher. And you can see now that we peaked above recent levels. We're now at levels they're not seen since the 23rd of May on these 24-hour markets on the French session today. So back to winning ways across the European markets at the start of today's session. Let's take a look at what's been happening overnight in the Asia Pacific markets. Markets seeing gains across the board with the rise on the Hang Seng stock index up over 4% at one point in the session in today's trade. Yesterday, Chinese leaders pledged to step up policy support. Today, Chinese stocks are rising. Beijing said it'll step up economic policy support to focus on expanding domestic demand, boosting confidence, and preventing risks in the market. Property policies are due to be adjusted and optimized in a timely manner, according to the statement today, in response to what the authorities call significant changes in the property market supply and demand. What I want to bring up now is the Hang Seng stock index in Hong Kong. The Hong Kong markets really enjoying a big lift on the session today, both the tech and the other markets. You can see if you look at this chart here, up for a second day at 19,404. Not just too far away from the 200-day moving average. And in fact, in the grand scheme of things, we haven't really lifted away from recent lows too much, but it is nonetheless the second day in a row of some relatively hefty gains. Let's take a look at what's been happening on the Wall Street close as of the end of the session yesterday. It was really a good day for the Dow, not so much for tech stocks across the board. I want to begin with what's happening on the Dow Jones Industrial Average. If we look at this chart here, I've been talking about this band that we've had here between 33,604 and the prior resistance at 34,590, breaking that. And I drew this this dotted line up here with the price target of 35,493. It looks like we could well end up hitting that. That will be levels not seen there in the market since the 21st of April. And that completes this pattern then. And we are gaining on from the close we saw yesterday. We're now up again at 35,422. So money continuing to go into old economy stocks. Later on today, as we'll see in just a few moments' time, we'll have numbers out later on today from Google and Microsoft, which might give a little bit of a steer to the Nasdaq, which hasn't seen too much activity in the last couple of days or so. But in the 24-hour markets, very slim green candles for a second day in a row, 15,471. So there's a bit of buying interest in these markets. Now at 9 o'clock this morning, we have some economic data out that could help give us some upside potentially to the German DAX if we get a good number out from the German IFO business climate number. But the bad news is, let me tell you now, is that it is expected to fall to 88 in July from 88.4 in the previous month. Now, there's two things we should be watching out for here. It is not just the German DAX, but it is also for what's happening with the euro-dollar chart. Let me just bring up a euro-dollar chart to show you what's been happening here. And the Let me go into a daily chart. So we've got an update on the recent pattern I've been talking about. Now, I've been talking about this price target here of 110.03. At the moment, we got the euro rising against the US dollar. Could we see all that unwound if we do get a worse than expected number coming through from Germany? Of course, remember, Germany is the largest economy in the eurozone and does have a substantial impact on the direction of the euro dollar. If we do get a poor number out from Germany, then there is the potential, I think, to reverse some of what we've seen today, which has been a little bit of upside trade for the euro. And then my price target is still 110, this level down here. We're currently trading at 110.86, but 110, the round number, is a 61.8% retracement on this Fibonacci move. While we're staying on the foreign exchange markets, just want to quickly update you as well on what's happening with sterling. You can see the sterling support here at the 128.10 level, which is what we've been following here. The price target on the Fibonacci we've been following, locking in profits on the way down, and we've now seen this market support at the 128.10, 61.8% retracement level that we've been looking at. So sterling holding on that level. Just want to update you as well on what's happening with the Japanese yen. We've seen the yen weaken recently. In the last couple of days, there's been a little bit of a reversal. We've hit this 142 retracement level at 61.8% on this fib. It's amazing, isn't it, how these things do seem to work out quite neatly, and that is a level which we seem to be holding on to at 140, 145. We've got the Bank of Japan coming out on interest rates at the back end of this week, not expecting any move. And in fact, we could well end up seeing some return of some of the dovish rhetoric that we've been seeing in the Japanese economy, despite the fact we've got inflation there. Inflation does now appear to be peaking according to data out last week. So we're following up on that at the back end of the week. But before then, of course, we got the Fed meeting on interest rates tomorrow, where we're widely expecting the Fed to raise interest rates by a quarter point. But that's tomorrow. I get off the beaten track for today's trade as we continue to monitor what's happening, looking ahead to that Joe and EFO at 9 o'clock this morning. Let me just stay on the charts. Just want to run through some of the other charts worth looking at today. Look at this yesterday. We saw a drop of 1.5% on the daily chart on Unilever. I quite like the look of Unilever's first half numbers this morning. Underlying sales growth of 9.1%. The company says it's been driven by all business groups across the company with 9.4% price growth. The only downside I see here is the fact that volumes have drifted a little bit. Volumes are down 0.2%. So how have we got this rise in sales growth? How have we got this rise in revenue, but a drop in volumes? It's all to do with inflation. So inflation clearly helping, and inflation doesn't seem to be impacting too much in the grand scheme of things for people's demand of the product. Unilever's second quarter underlying sales up 7.9%. The second quarter of these first half numbers out this morning looking good. 7.9% up for Q2. We've been looking for 6.62% according to Bloomberg. So this all looks to be pretty good. Turnover up 2.7% to 30.4 billion euros. Underlying profit improving 3.3% to 5.2 billion, with a 10 basis point margin improvement to 17.1%. So as I said, I quite like the look and shape of these, the feel of these numbers out today. So let's set up a trade. Upside trade here. Again, not a trade recommendation. It's just the way I see the results out this morning from the fundamentals. I'll be using this line down here of support for a point at which to put my stop loss. So I would personally, I'm going to open a long trade. This will start at 40.16, which is the level of interest here on the London markets. My stop loss goes underneath here at about the 3,900 level with a view to taking this up. It's completed its third $750 million euro tranche of the ongoing share buyback program of up to 3 billion. And they've increased their brand and marketing costs. It is a cost-based increase, but nonetheless, they can do this in the grand scheme of things. It's gone up by 0.4 billion in constant exchange rates. As I said, I quite like the look and feel and shape of this. We'll have to see how things open at the start of today's trade. One company I don't like the look of, and this is a continuing story, and you can see actually the direction of travel here for Reach. We've got the TNI ticker in the middle here, which is the old Trinity Mirror Group. But look at what's been happening the last couple of days ahead of these numbers out this morning. Adjusted operating profit down 11 million to 36.1 million. Now that is a 23% drop in operating profit, reflecting a relatively hefty decline in revenue. Group revenue is down 6.1%. It says that there's a strong circulation performance, but the costs have risen beyond what it is economic to print a newspaper. Print 217 million first half 2022, that was 233 million, so that's down 2.7%. But the circulation is up 2.4%. Digital revenue is 60.8 million. Now that was 72 million this time last year. That's down 16%. So I can't see much news that's going to give me any incentive at 68.3 pence. I think this line at 65.5 is in jeopardy, which would then take us down to the last breach of that line, which is the 29th of September, albeit briefly, in 29th September 2022. Again, staying on the charts, just wanted to update you as well on another company I wanted to take a look at. And we've got Wix in a little bit of a tight corner. Like-for-like sales in the first quarter down 1.8%. Like-for-like sales in the second quarter up 3%. So the first half sales broadly up 0.7%. They're planning to maintain their dividend, and they've got a share buyback of £25 million today. But I think the problem with Wix is that it is finding they're going tough. People just aren't looking to spend anything other than necessary spending. That's good if you go to Wix, you want to buy a bit of fencing, want to buy some tiles, whatever it is, but only if you do have to. People aren't going out of their way to improve their homes. Instead, they're funneling money into food, fuel, and trying to get around to make sure that they can continue to work. So that is the priority importance for people, and some of the discretionary spend is going out the window. I'd be really interested to see when the company comes through with a full update on its profit and loss, what happens to things like garden furniture and parasols and things that people don't have to buy, but in times of flush money they do. So Wix, interesting to see what happens at the start today. I can't see much here that makes me celebrate. Let's take a look at what's happening with Adidas. Last night, Adidas came out with numbers, gave us a taste of what the second quarter earnings will look like. Adidas announcing an operating profit for the second quarter of this year, 176 million euros, down from 392 million this time last year. Group revenue falling in Q2 by a margin of 5% to 5.3 billion, but gross margins up a touch. Let me show you what's happening with the chart for Adidas. This is upward facing channel, which I quite like the look of. We saw an uplift yesterday in the market by a margin of 1.2% to 174.39. The forecast, that's the good thing, I think, for investors this morning. Now, Adidas now expecting full year operating loss of 450 million, down from previously estimated 700 million, thanks to unexpectedly strong sales of the Yeezy shoes left over from the abandoned collaboration with the rapper Kanye West. It's a well-trodden path. I won't go down that particularly, but as we know, Adidas suffered as a result of that. Full second quarter results expected on the 3rd of August. If you're long on this at 174.39, your stop goes below the 170 level euros, which is below this green line here, which is the 50-period moving average. Let's take a look at two tech giants due to report after the closing bell tonight. One of them is Alphabet. The Google parent company forecast to post earnings of $1.34 per share on revenues of 72.82 billion. Investors will be attentive to any AI-related announcements. I'd like to know how the group can drive incremental monetization through generative AI searches. Ad revenue will be key. Google ad revenue is expected to reach $57.45 billion, while YouTube ad revenue is seen at 7.1 billion by analysts. Cloud growth is another point of interest. In the previous quarter, Google Cloud turned profitable for the first time. Revenue in this division is forecast at 7.83 billion. The Alphabet share price chart has been banded recently between $115.84 and $129.50, not too far away from the middle at 122.28, up 1.6% yesterday. This stock will open at 9 o'clock this morning. All sessions on the IG platform ahead of the results a little bit later on tonight. Another tech giant due to report after the bell tonight is Microsoft. Earnings expected to rise by 14.3% year on year to $2.55 per share. Revenue should reach $55.44 billion. Now that's up 7% on the same quarter this time last year. We've recently seen a record high for Microsoft, all the way up at $366.80. I want to show you the long-term chart. You can see when we went above the $1 trillion level. I think Apple was the first to do that as a corporate, publicly owned Western company. That was the 4th of June 2019 for Microsoft. It then went above the $2 trillion market cap level for the first time on the 17th of June. It disappeared below, and this recent high has taken us to within a shot of the $3 trillion market cap business. Now, we've seen a little bit of a pullback recently. The launch of ChatGPT ChatGPT earlier in March gave a boost to the stock. It still followed a trend line that began earlier. Since the start of 2023, Microsoft shares have gained around about 43%. For now, Microsoft's fate remains bound to its cloud service business, Azure. Watch out for that a little bit later on today when the company reports earnings. Other earnings expected today in the States. Visa before the bell this morning. Earnings per share seen at $2.11 on revenues of just over $8 billion. Viva's beaten estimates for the past 12 quarters. General Motors forecast to post earnings of $1.84 per share on revenues of $41.92. Early this month, the automaker said that US deliveries rose 18.8% to just under 700,000 vehicles. Now, that's its best performance since the fourth quarter of 2020. Also, want to see, from my personal perspective, I want to see just how much take-up there is on electric vehicles. I'm getting the feeling that people are pretty much sort of done with the first generation purchases. They're now waiting for the better technology driven companies, the batteries and so forth, with companies focusing in on better performance for electric vehicles. We'll have to see what GM says before the bell this morning. Also watching Verizon, the comms company, earnings per share expected at $1.17. That's down 10.7% year on year. Unlikely to give a boost to share price, down some 30% over the past 12 months. Investors are concerned that Verizon's generous dividend could well be reined in. Let's take a look at what's happening in oil prices, up for a third straight day. I want to show you what's going on with Brent, because we've hit a level in the last couple of days that we've seen here back on the 24th of April. And again, you can see this is an interesting area of the market. The 13th of March, it provided some interesting resistance. So 82.88 is an interesting level to get beyond. If you see a climb beyond this, and into yesterday's session, we rose beyond the 200-day moving average, which was, I think, technically significant. If you are long on this, stock goes underneath the 200-day moving average, but I'd wait for a candle close beyond the 82.88 before taking it up then to the next price target, which were the highs we saw back on the 13th of April at 87.15. So technically, I think this is looking strong if you get a candle close beyond where we are today. So if you're not positioned in this market, but think that the recent trend could continue, and this is all bound by the idea that we just haven't got enough oil coming onto the market. So whatever demand there is this year is going to eat into supplies that are already out in the market. And we'll see how things develop in the next day or so. But this is all part of this idea that China hopes to continue to see some support given by the authorities there. Let me just take a look at what's happening with copper as well. Up for the last couple of days. Again, this is all due to that China story benefiting industrial metals. And gold, just before I take a look at one of the big trades of the day, which is wheat. Gold is reversing some of the losses that we've seen over the last 4 days or so. But I want to show you this chart to end up our look at what's happening as we go into the European session today. We're off the highs today, but we've seen a new high not seen in this market since the 22nd of February, the destruction by Russia of Ukrainian grain warehouses over the last few days on the Danube River, sending wheat prices in Chicago up nearly 10% yesterday and gaining as well on the session today. Commodity traders now fear that Russian attacks will become a real threat to grain exports and shipping. After refusing to renew the Black Sea grain deal last week, Russia's been targeting infrastructures in the Odessa port. Since Russia's invasion in February 2022, Ukraine has expanded grain exports overland via the EU to around about 1 million tons a month. Any interruption of these alternative routes could quickly hit international grain supplies. We could well see further upside for wheat. It's certainly worth looking for this trade. This is the next line of resistance up here at 806. We're currently trading at 760.2 the bushel. That's it. We're back at 10:30 with Charting the Markets. Watch out for Unilever and Wix at the start of today's trade.